Welcome into a brand new episode of WSI TV. Enjoy the show.
Hi guys, welcome back to WSI TV. Today I am joined by Jim. We are going to be doing another episode of a market update for you. How are you doing today, Jim?
Good, thank you. Thanks for having me. Good,
Awesome.
thanks.
So this is going to be our first one since the new year, which obviously is very important. We're going to look a little bit back into 2019 and seeing everything that was going on with the headlines and with the actual market and kind of juxtapose that to what we've seen so far in 2020.
Sounds good.
Yes. What do you think about the uncertainty that we saw just throughout the entirety of last year?
Yeah, it was a real exercise, a good study of how the noise from the mainstream financial media is saying one thing and the market's doing another, and we only listen to one expert, as it were, which is the market itself, and we but that can be a challenge, because when you have this unanimous voice from a source we're supposed to trust, mainstream media institutions and experts and you name it, to stick to what you feel, what is true based on experience, it's difficult, because we have this ability to conform. So, but it paid off again. We followed our system. We called a brand new bull market on September the 9th, and it's been on a tear ever since. But that did require ignoring all that noise about all the things like the trade tensions, the Brexit stuff, all the worries that they used to sell airtime. It did require ignoring that, and we see the results right now. But now they're finding new things to obviously complain about.
Yes. So that's actually what we're going to get into for the majority of today. One of the biggest news stories I think that we've seen in quite a long time is that we did have the issue with Iran pop up late last week. And I've seen quite a few headlines just this morning even that the reason the market has taken a little dip in the daily chart is because of what's going on in those tensions. But we've been calling for a correction. You've been calling for a correction for quite some time now. So what is your...
So I wish the market would react even harder to this Iranian thing, so it can, come back down to a nice little sort of comfortable trend line. We're having, before we talked about, we could do about recap of last year. In October, I was talking about spooky October and how we will have to have the jitters about that. And sure enough, that went true to form. And then we always have the Santa Claus rally, optimism during the holidays, and that went true to form. And now we're supposed to be having what's called the January hangover. I wish it was a much bigger hangover right now, and hopefully it will be. This Iranian thing, the market it's not really putting much of a dent in it, if at all. It is, what it's worrying about. It seems to be as strong as an ox right now, and not caring much or seeing any kind of danger, as it were, to derail it.
Yes, and that's true for most of the indices we've been looking at. The S&P has been hitting record highs almost every week, but the Dow and the Nasdaq are right behind it. So it's definitely something,
which is a good thing, because you're right to look at, though. You want the indexes in agreement. There's no contradiction.
For sure, yes. So just kind of capitalizing on that fact there that we've just talked about, is this market dip isn't necessarily attributed to the news that we saw 24 hours ago market time. It's something that's...
I think if it was, you'd see a much harder dip, Taylor. It would be much more dramatic if it really... Fear is a very powerful emotion in the market, and if it really was this whole, wow, we're going to war, or they're going to bomb us, or something like that, something terrible, the market would have absolutely taken a bad dive, especially in its fairly vulnerable position, I think, right now, up there on a pole like that. And it's barely put a dent in it. It really doesn't seem to care. It's quite right.
So moving on to just some extra stuff that we picked on just up this week. Big Pharma has kind of got a win under its belt already, even though January is still very new. We saw that drug prices went up by more than 9% specifically for Pfizer on 40 different products, but on average, drug prices go up 5.8% on January 1st.
Right.
Which is insane.
Which is basically that's just 5% straight on their bottom line. And so then you're seeing that in the healthcare stocks right now are looking very good, in an early phase actually, looking like we're in early liftoff. So that's a sector we're going to be watching closely. Healthcare is looking ripe for a brand new bull run in line with the overall market. Another thing that's looking great is housing. That's part of our thesis for 2020. It's going to be 2021, moving into 22 should be great years for real estate, with all the factors considered. And what we're seeing now is likewise the home builder stocks are looking very strong in an early phase too. So it's going to be good to get on board some of these stocks in what looks like the start of that run. To be some great opportunities there.
For sure. And then coming into the new year, we do of course have sectors that we're looking at, but we're also looking at investing as a whole. There are different ways that you can invest. Of course, you can go the traditional route through a broker, but lots of these ways are now digitized. So we've got Robinhood, you've got Charles Schwab, and all these places that you can trade online. And we've got Vanguard. They're kind of lagging behind the rest of the Fintech revolution, but they've just now introduced that they're going to eliminate trading and commission fees, which they're kind of behind on that. About 6 other
catching up with Robinhood and stuff like that. Yeah, exactly. So, which is obviously fabulous, because then that entry level to a lot of people. You start with $100, and which is a great way to start as well, because those small amounts, they expose you to a little bit of pain, but not too much yet. It's a great way to get your toe in the water.
For sure, yes. So looking into 2020, we're going to be following those developments as they come. Of course, they're all introducing new things like fractional ownership, and you can start investing with as little as $1 on Robinhood now. So it's definitely lowering the barriers to investing. It's
great, which is also going to be good for the market itself, because that was one of the things that fueled the tech boom. It ended in tears at the end, but what people forget was a lot of money made before that. And one of the things that fueled the great bull markets of the late 90s was the fact that the internet came along. And so we didn't need, our phone with a broker. It's much more accessible now. You have your online account with Charles Schwab, and it's all at the touch of a button. And so that's another barrier down now, is that, is the financial one. And so these things can, fuel what we're seeing as the start, what we called as a brand new bull market in September.
Exactly, yeah. So I think that's all we have for today, just kind of looking into the outlook from the beginning of the year. And you heard it here first, of course, Iran is probably making a bigger splash in the headlines than it is in the market. So keep your eyes on our channel. We're going to have more updates for you coming soon. Thank you very much, Jim, for being here.
Thanks for having me.
See you soon.
See you soon.
Thanks for watching the latest episode of WSI TV. Be sure to visit WSITV.com, where you can subscribe for free with no contract and gain instant access to the secrets of self-made millionaires via the WSI TV Vault. So go ahead and claim this gift for free now at WSITV.com.